What I do know is the concern, the volatility in terms of a policy perspective is really about the totality of all the policies. And really, I think in the last couple of weeks about the tariff policies. I mean, what is tariff policy over the course of the next, 3 to 6 months? Is it 25% tariffs on our biggest trading partners? Or is it zero? Because it's been both over the course of the last 30 days. And if you're managing money or running a business, the only thing you can do in that sort of circumstance is pull back, cut back. And that's why we're seeing a broad-based cutback in confidence, not just in the Michigan surveys, but we're also seeing it in CEO confidence, which is now at the weakest level it's been in more than a decade. And given that, it's going to be very hard to get those sort of animal spirits that are hoped for to really continue this economy right now.
Step up Chairman Powell. If things are as bad as you say they are, why isn't he prepared to step in sometime soon?
Well, he is really handcuffed by the inflation picture. I mean, while the headline numbers for PPI and CPI came in below expectations, the PCE expectations continue to be elevated. They're too hot for him to continue to cut. And let's be honest, I don't think he necessarily cares too much if he can hang weaker economic conditions on the new administration.
I'll just jump in. How unusual is it to see inflation expectations climb against the backdrop of lower energy prices? How unusual is that?
Well, it's pretty unusual, but it's also pretty unusual to shift tariff policy up from essentially, close to zero, multi-decade lows, all the way up to the highest levels since Smoot-Hawley, right? So that is getting priced in. People are digesting that, and that has a meaningful influence on what you're seeing in those expectations.